Ukraine crisis has sparked widespread turmoil in an increasingly globalizing world, all while central banks across the globe are still recovering from the aftermath of the pandemic. After relying heavily on monetary easing and fiscal expansion, these financial institutions, including the Reserve Bank of Australia, have been tightening their policies to dampen inflation. Meanwhile, interest rates played a key role in the recovery journey of most nations, becoming an all-encompassing tool to bring back stability into the financial systems. But since economies are facing a range of market forces, it seems difficult to determine just how interest rates will exactly respond to the ongoing pressures. So that said, let's have a look at the relationship between rising interest rates and debt. There is abundant evidence from history that large amounts of debt often accompany wars. As countries resort to borrowed funds to finance a war, the cost of interest rate payments accumulates, even after the war has ended. Just recently, Russia decided to raise its interest rates by as much as 20% after the currency tanked to record lows. Some of the biggest rating agencies have deemed Russia's debt junk after the imposition of heavy foreign sanctions. And for other nations, the turn of events is not as direct and certain, as they face a range of factors. While inflationary pressures have mandated the need for tighter policy action to other countries, there is also a risk of slower economic spending and reduced investment from rising interest rates. Essentially, central banks are facing a tug-of-war between controlling inflation and managing slow economic growth. Despite a range of different market forces, most central banks have decided to continue with their existing monetary policy plans. And since inflation is the pressing issue at hand, central banks, including the US and UK, intend to continue raising their interest rates. However, these interest rate hikes may be subject to some revision, provided that inflation may not rise by unpalatable levels over the long run. Now that's up to speed, hit that bell icon to stay up to date and boost your financial IQ. I'm Holly Shields for Kalkine Media.